Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is Monday Mortgage Minute. Welcome back to a brand new week. It's actually going to be a little bit of a light week, except there's one thing, and that one thing is going to be on Tuesday morning when we get this month's CPI reading. Now, this week's inflation reading might weigh in on the Fed's rate hike decision coming next week, but I think we're already seeing the signs that a 75 basis point rate hike is already baked in the cake. First, I want to highlight that the expectation for the CPI reading is flat, which means that it actually hasn't gone down and hasn't gone up. Well, if it hasn't made any change, that means that the Federal Reserve, of course, naturally would have to come in with a rate hike that can cause the change they're looking for. Prior to the Jackson Hole Symposium, there was some sentiment in the market that maybe the Fed would only increase their Fed funds rate by 50 basis points in September. But the more and more we get information and we get more Fed people talking, it's sounding like 75 basis points is what it's going to be. Now, you pair that with the ECB, which is the European Central Bank, that last week increased their Fed funds rate by 75 basis points, and I think that's what we're going to be staring down the barrel of next week. I guess what I'm really trying to say is that the CPI number coming out on Tuesday might just be a formality, and it's kind of the biggest ticket item on the economic calendar this week. The other thing I would say is that if you were expecting the CPI number to be great and going in the direction that they were hoping for, then you'd see a lot of news media, economic media, financial media running up to Tuesday's number with a lot of support and expectation and guidance that this is what we should expect. However, we're not seeing that, are we? So here's the takeaway. On Tuesday, what I'm looking for is the rate of change. Remember, 2 weeks ago in Monday Mortgage Minute, I was explaining to you that in order for inflation to get to the Federal Reserve's target of 2%, the inflation rate decline will have to continue month over month at the same rate and frequency for 10 consecutive months before we even get into the twos when it comes to inflation. Just a couple seconds ago, I said, though, that the expectation that this reading coming out this week was going to be flat, which means there wasn't a change, which means it's not going down. So we're going to have to see Tuesday morning what actually happens, and that will weigh in on the mortgage market. So what should you be looking for in the mortgage market now that this has happened? So let's take a look back at last week, what happened in mortgage rates, where mortgage rates were testing the June highs. Almost in lockstep, the bond market and the mortgage-backed security market reflect what people are already feeling on Wall Street as far as sentiment is concerned. You saw rates go up last week in anticipation of a Fed rate hike coming up at the end of this month, but also as a reflection that they're not going to back down until this inflation is under control. What that means is continued higher rates, and that means this week even, they're going to probably be neutral or maybe go up. There's not a single person that we're hearing from or talking to or watching that is expecting rates to go down by 0.25%, 3/8, or 0.5% this week. And it certainly isn't going to go down that fast the week prior to a Fed meeting and on a week where there's light economic news to justify such a position. So while all this is happening and the cost of money is going up and going down and staying flat and changing and adjusting, we're seeing here locally in San Diego that there are a lot more listings coming onto the market, and the listings that are coming onto the market are staying on the market longer than they were just a couple months ago. So I think this is a hand-in-hand reflection of the cost of money increasing, making it a little bit more difficult for people on the affordability scale to get into said homes. Meanwhile, you have sellers trying to take advantage of the top of the market by selling now, but it's taking a little bit longer because the buyer pool is smaller. So take all that and condense that for whatever that might mean for your specific personal situation. And maybe if you're trying to buy a home by the end of the year, this is going to be a good time. You still have time right now to get your qualification done or updated in order to get into a home before Thanksgiving and Christmas and be all settled to welcome your friends and family. If you're still unaware of how all these things I'm talking about weigh in on your personal mortgage, real estate, and financial plan moving forward, please make sure you reach out. Let us know what situations you're facing financially and in your budget so we can help identify if there's any solutions in the marketplace for you. If you missed our conversation about HELOCs from a couple weeks ago, you can click on this banner to watch that video right now. And if you want to know more about what we're doing with ADUs and expanding current territory here in San Diego on lots, go ahead and click this other video that William and I recorded talking more in depth about that. As always, please like this video, share this video with people you know, love, and trust. Make sure you subscribe to the channel to make sure you get notified first every time we drop a new video. Thank you so much for watching. We will see you again next week.